And good morning and welcome to the VSA Capital 5 Minute Morning Miner on Wednesday, the 4th of January. Good morning, Paul. How are you?
I am well, thank you. How are you?
Yeah, not too bad. We're all sort of back into the swing of it a little bit, but news is still quite thin. But let's start with one which is sort of popular and in a hot area and lots of people are talking about. And that is, we saw yesterday that late yesterday, Piedmont Lithium. They've changed their offtake with Tesla, etc. And of course, that could have a knock-on effect for Atlantic Lithium, couldn't it, Paul?
Yes, it does. In due course, it might affect Atlantic's speed of development here on their West Africa deposit. The specific news on Piedmont was that they had amended their delivery contract terms with Tesla to accommodate the SC6 spodumene concentrates, probably to be coming first from the Sayona North American lithium mine restart in Canada, and not from what had originally been agreed at the time of the original contract for those cons to be coming from the Piedmont mine in North Carolina. The reason being the mine in North Carolina has been hit with some ongoing permitting delays there, such that the time to first production now is quicker through the Sayona facility in Quebec. So Tesla now will, under the new terms, get 125,000 metric tons of concentrates with delivery beginning in the second half of this year, and that's for a 2.5 year period under the current contract.
Yeah, just a small point that I was making to people is that, that the EV revolution, a lot of people feel it has stalled. But, I don't think it has. It's going to carry on. But at the same time, lithium will be found elsewhere. Other mines will open up. Recycling will get better. So, look, we're on an exciting journey. There's no question that the lithium's an interesting space. It's just a case of trying to get the right valuation for it, really, isn't it?
Yes, it sure is. And we said well back there in 2016, for instance, in our earliest major note, that we thought that every lithium deposit that can be defined will have to be financed to production globally in order to meet the targets for the 2050 emissions goals. And that still remains very much the case at this point.
Well, Paul, if everyone had listened to us back in sort of 2016 when we were telling everyone to buy lithium, all of our clients would be multimillionaires now. But that's also perhaps why we have an element of caution now, because when we were early to the game, many other investment bankers are now late to the game, and of course pushing it like mad. And you've got to put it into perspective. But anyway, that's another topic, probably not for this podcast. What other major news you had this morning, Paul?
Well, we had Tieto Minerals has announced yesterday that they have started the commissioning on the brand new big gold mine it has there in West Africa. That's to be a 260,000 ounce annual producer with an all-in sustaining cost target around $840 an ounce. So we wish them luck there on that 4.5 million ton per annum conventional CIL mine operation in Cote d'Ivoire. And
Yeah,
we
correct.
also had news out from Vast Resources on an operating update for their Baitaply skarn deposit there in the Balkans. They have met what they had predicted as far as shipments is concerned during the month of December. So they're feeling very encouraged with performance improvement there.
Yeah, just going back to Tieto Minerals, it is ASX listed, whereas Vast Resources, of course, is AIM listed.
Yes, that's right.
Okay, Paul, anything else you want to mention this morning?
Well, only to say that the precious metals prices are going up today, along with the US dollar, and it's because of weaker than hoped for manufacturing index data, which was released yesterday, both for China and for Australia for the month of December.
Yeah, we have gold at 1861, which is definitely pushing up higher, and silver at 24.30. And I think we all know how we like to play both of those commodities, but they are commodities I think that are proving to be very popular at the start of this year. Certainly central banks are buying gold like there's no tomorrow. and I think we see rallies in both. It's amazing, isn't it, Paul? If you look at the performance of commodities on an annualized basis and go back like 20 years, how they rotate so much, isn't it? Whatever was top of the charts last year is probably going to be bottom of the charts this year. And again, going back to our lithium conversation, that's perhaps why we're a little bit cautious there, because it was top of the charts last year.
Yes, and there was a theory on the performance of the Dow for investment for success, and it's called the dogs of the Dow, and whatever is the worst performing 5 stocks in the Dow Industrial Average of a particular year should be invested in as better performing over the next 2 years, and vice versa. So it's and commodities are definitely one of the places where the higher volatility takes place on the Dow. So
I'm not sure I'd try that on the AIM market. Interesting enough, the one that isn't moving, I mean, it's moved a little bit, but it's still lagging perhaps, but it's the one that everyone pushes the whole time, is copper. And that still hasn't really taken a big move. But we'll maybe discuss that on another podcast. Paul, that'll do for today. I'll speak to you tomorrow.
Very good. We'll see you then.